banks are going to be extinct. And, this is just more consolidation.
This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm your host, Kerry Lutz. 5/22/23 is the date, show number 494. So we had options X last week, Nick?
We did, Kerry, and it was a pretty wild one when you think about it. The markets were able to carve out a pretty solid gain, though, into Friday. I always view options expiration as a time for the institutions to really take advantage of the small retail options trader that is playing that near-term expiration. And it's a week of institutional game playing. But when it was all said and done, the markets carved out a decent game. But I think now that options X is over, we're going to get to some real trading underway this week. And currently the markets right now are a little bit mixed. You have the Dow lower by 100 points, which isn't a big deal, down about 0.3%. The Nasdaq's up 0.4%, and the S&P is basically flat on the day, just up about 0.1%. So, we're going to get back to some real markets here, and we'll see where we go. But I have to just say one thing before we continue. I haven't seen this thin of leadership in so long. It's basically, Facebook, Apple, Amazon, Nvidia, and Google that are the strength out here holding this market together. Outside of that, there's not a lot of overall participation in a lot of other equities. So very, very thin leadership out here at this stage of the game. And I would, I'd buckle up here. I definitely would warn everybody to be a little bit on the cautious side right now.
Hey, you could say that about the government too, but we don't go there. This is a family show. We don't talk about politics. Hey, so
well, we'll have to talk about them a little bit, because we do have a debt ceiling approaching, right?
Yes, we do. Hey, so regional banks. So interestingly enough, Jamie Dimon said a couple of weeks ago, we don't want any more banks. We're not going to buy banks. And now you got Yellen saying there's going to be more consolidation, which means they're going to jam it down their throats, the big banks, whether they like it or not.
I believe they are. I believe that's what's coming. And, I think, we talked about it here where, banks are going to be extinct. And, this is just more consolidation. And she said it right out of the horse's mouth. I mean, that's basically what she said. There's going to be more consolidation. And she warned the big banks that you're going to have to pick up these smaller banks. So we're going to see a lot more of that. I don't think they're going to be takeovers, unfortunately. I think they're going to be take-unders. So, everybody should be aware of that. I would be continuing to watch that regional bank ETF that we've talked about on here, the KRE. That is the ticker symbol. Today, that's doing fine. It's up about 1.2%, and it's been holding up as of late. But, I would agree 100% that these banks are going to have to pick up these smaller guys, and they're going to, probably pick them up in little batches as we go forward.
Yeah. So you think the market's only going up because the central banks are supporting the banks, basically, and that's global, right?
That is global because there were 2 programs that the Federal Reserve launched. And the first program was a big discount window to all the banks. So, they all have access to capital. They're not going to, dry up and be, without liquidity right now. So that's part of it, in my opinion. But the other part is that, all the central banks, including the Federal Reserve and the European Union, Bank of Japan, and others, they all got together and they said, hey, we're going to support each other with liquidity because, as you know, Credit Suisse went under and they had to be bought out by UBS. So they're going to support each other with liquidity, but the details are very vague. We don't know exactly how that program works. So in essence, we have a form of QE out there without it being called quantitative easing. But there's still a form of QE out there right now. And I think that's why this rally has continued. I mean, you could just go back and look at when the banking crisis actually started in early March, and it bottomed. The stock market bottomed on March 13th, and they were coming out with news that they're going to provide liquidity. And since then, the S&P at that point in time, I believe on the 13th, traded as low as 1380, and here we are at 380. The spiders were, and here we are at 420. If you're looking at the cash S&P terms, we were around 3,800, and now we're at almost 4,200. So it's quite remarkable. Well, yeah, you have to look at it and say, hey, that's QE without being called QE.
All right. So later today, we hear more about the debt ceiling.
Yeah, we're going to have. I think President Biden is going to meet with Speaker McCarthy at 4:30. So a few times they've already come out and said, hey, we're going to have a deal done by this Sunday. Obviously, that didn't happen. So we'll find out what they have to say. But I think it's more of a dog and pony show. This usually goes down to the wire, where they make a deal, right before they're about to default. And I wouldn't even. I'm not even sure they're going to even come to terms with a deal. The Republican Party is a little bit split here. They're going to force McCarthy to come up with something. And, I just don't know if Biden is going to put up with that or deal with them. I think he might just invoke the 14th Amendment.
Is that debate real? I mean, what does the 14th Amendment have to do with the debt ceiling?
Well, I think it allows the president to pay the bills and go over Congress.
Okay. Well, I've heard about it. I haven't looked into it. It's just another gimmick, but they'll do what they got to do, in which case there'll never be another debt ceiling talk ever again, right?
I would think that would be the case, that would pretty much permanently end the debt ceiling. But, people don't realize, even under the Trump administration, he printed $6.6 trillion. Biden's printed about the same amount, $6.6 trillion. So now, you're up to basically almost $14 trillion in the last 6 years. I mean, people want to know why there's inflation. Then you throw a couple of wars on top of things, couple of supply chain disruptions, and and then you're going to have more inflation. Yeah,
what a shocker there, huh? And gold looks like catching a bid today, huh?
Well, no, it's actually down a little bit, but just down, basically a little over 0.1 of 1%. It's nothing harmful right now. When I look at gold futures, they've backed off, and typically they sell off during options X, and that was not a shocker to see last week. But there's still a lot of daily chart support around the 1940 level. So right now gold's at around 1975. Gets down to around 1940. That's still a pretty good daily chart support area. So we'd watch it closely there. And if it breaks that level, then you got to be really careful, because then it could have some more downside. But it doesn't look horrible at the moment, but it has pulled back as it typically does during options expiration.
All right. And finally, Bitcoin, what's the story there?
So, Bitcoin's pretty interesting right now. So if you look at it, today it's kind of on the flattish side, not a big deal. It has come under pressure recently, so we definitely, want to pay attention to that. I've been saying that it could have one more minor pop and then it goes a lot lower. But here's something interesting, and listeners might want to look into this a little further. But I follow the commercial money, and the commercial money has been increasing their short side exposure to the popular crypto name. But they're usually early to the party, but they are starting to get very, very bearish Bitcoin right now. And I track that pretty closely each and every week. And this is a very, very negative sign. So the chart says, it's possible to get one more pop up. And then, I think Bitcoin is going to go a lot lower. But if it doesn't do that and Bitcoin actually puts in a bearish consolidation pattern, I think it's ready to go a lot lower without the pop. So we're going to be watching that chart pattern pretty closely, but Bitcoin looks like it's on borrowed time right now.
All right. I guess we'll leave it at that. And we will be back on Wednesday. Make sure you go over to Nick's site, inthemoneystocks.com. See how he's beaten the averages for decades. Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Emails are welcome, KL@kerrylutz.com. Nick, we will talk to you on Wednesday.
Sounds good, Kerry.